Welcome to another podcast with Stock Odds. We have odds and ends with Rob Friesen and Dave Singh. Good evening, Rob. How's it going?
Not too bad. Look forward to chatting here and getting a handle on what are we doing tomorrow.
Exactly. We're just reviewing the futures here, trying to get our bearings and on how the week might play out, and look at Stock Odds to see what the data suggests that might be good plays for the week.
As of right now, since the futures open this afternoon, where are we at with the Dow, the S&P, the Nasdaq, and the Russell 2000?
They're all up nicely, close to 0.5% up, and the Russell's a little bit more. Dow's up 179 points so far in the futures. We've got the VIX down below 20. Oil's up a bit too. 10 years stable. So it looks like a risk-on mentality. And when I checked the odds earlier on the almanac for the last 3 days and the last day of the month, we're set up to be stronger on the index.
Yeah, the Friday was the first day of the last 5 trading days of the month. We tend to weight the last 3 days even heavier sometimes, but the 5, the 3, and the last day this month look pretty good. And, we got a major boost with the FOMC, the anticipation, and then, of course, the follow through to that. So we got quite a boost already in the market from that, but doesn't seem to want to slow down. I guess the reason, the context, it's not like we came off of Nothingsville. We actually had a correction. We had a pullback of 5%, and then we got to rally back from that. So that's sort of a lot more satisfying to people rolling up to put money back into the market when they know that they're not, chasing it, that they actually had a bit of a pullback. So I think that was a very satisfying thing for the market. Mm-hmm. And of course, there was a reason for that. There was a number of concerns, especially with the China thing. So having sort of shrugged that off a little bit, the market's appetite for risk came back significantly. But we weren't like just wholesale going and buying the riskiest assets. You saw some value proposition there. You saw some Dow components moving. Like I mentioned, the diamonds were stronger one day than the SPY was. There was a real sort of theme there in as we're coming back from this correction. Hey, there's people want to buy Caterpillar. They want to, you know what I mean? Like they want to buy some good names and not just the speculative stuff, right?
Yep. Well, I was studying the last 3 days and the last month, and the thing that stuck out to me was that the SPDR is really expected to outperform the IWM. So the market will be stronger than some of the small caps. But then I want to get a little more granular. I want to see what sector ETFs might be stronger. So the almanac basically says for the last 3 days, things like QQQ, XLK, SMH, the chips, KRE, regional financials, these are expected to be stronger in the last 3 days. And things that are weak are gold, biotech, silver, energy. So that tends to be on the weak side. So maybe we can play some of those sector plays against each other to get a little more advantage for trades.
I mean, talking about just energy right now, like WTI at the moment's up 1.41%, and that already pulled back a little bit after. I think the last sort of 20-30 minutes, it's pulled back a bit. Crude oil Brent 1.36. Gasoline's up, heating oil's up, natural gas is up even 3%, ethanol as well 0.59. So again, much more than the 0.5% that the Dow futures are up or whatever. So oil's been pretty strong. So does that mean that you would tend to approach it and go like you don't really have much of a concern to be short that premium tomorrow morning, or would you sort of want to favor on the long side some of these oil stocks?
Well, we've been up 3 days in a row, pretty solid gains, and we're expected to be weak for the last 3 days. And with it being up pre-market, it's kind of used up its potential energy, right? So maybe it's not so bad to be short coming into the next couple of days.
Well, we made let's see, let's just go to the weekly here. Crude, the Brent crude is making new weekly highs and crude WTI is just about to its highs from that was in July. So crude, West Texas crude's getting back to that point, but Brent crude has already surpassed it, and we're at 79 and 17 a barrel. It's really got some legs under it. So yeah, it's moved up strongly for 4 days in a row for the oil futures. It's certainly premium. I think that it's a little bit more forgiving, even like let's say you shorted oil stocks into this kind of premium that they're showing now, and even if you're wrong, it's a little more forgiving than if it's the first day or two after a correction or after a breakout. You know what I'm saying?
Yeah.
Like it's already, like you said, it's already been on the move for quite a while. But now, is there any other catalysts behind this that we should be concerned about and say there's further reason? I mean, we're still seeing supply disruptions. I know I saw a little snippet there on the UK was having a problem getting, gas. A lot of the pumps in the UK are out. Not sure what's going on. I didn't get a chance to dig into it further, but so do we still have supply chain disruptions, hurricane-related disruptions? What's your thoughts there?
I don't see any massive disruptions or catalysts that way. I know just from a retail level, like if you go out and about, there was so much demand for gasoline and traffic is up. There were some studies last week that the traffic now is worse than it was even pre-pandemic. So I don't think there's a slowdown in demand, and especially I know
No, I don't think there's a slowdown in demand, but we have a tightness on supply. We have tight supply markets on oil right now and gasoline, do we not? I mean, I think that's where this pricing is coming into play, isn't it?
Yeah. But I heard one story that China was selling some of its crude reserves, so that's putting more supply on the market. But there is a tight market.
Well, I think it'll be a while for that to hit, even if they do, get ships loaded and ready to go. It still, takes time to play out, right?
Yeah.
So I'm going to if I get odds after the move that we've already had that says some oil stocks should still be up. Let me give you an example. I ran some predictive analysis on the TLT move that we had on Friday, and it said that there was some oil stocks that were quite attractive from the long side for Monday. So I might take a mixed approach, meaning some longs that are odds are favored and some shorts. I don't think I'll block down the whole deck and say I'm not short, I'm not going long any or I'm not going short any. I think I'll mix it up on that one.
Nice.
Yeah. Is there any groups that you think you might stay away from altogether, long or short?
Well, I think basic materials, we were talking about that earlier. What's your opinion on basic materials for the week?
Well, I mean, they're up in about the same as the S&P and the diamonds are up now. They're up about 0.5%. Oil and gold and silver, and so
but they've got hammered on the 1 month, on a 1 week level, and even the past week. I mean, so much damage has been done.
Well, okay, so they're priced in U.S. dollars. So what's the dollar doing right now? Let's take a look at that. Well, the U.S. dollar is down. Again, this is part of this flight to, we're kind of like risk on. So normally the dollar jumps up when there's risk, and it's selling off now. So risk is behind us a bit. So if the dollar's down, commodities should be ticking up a little bit. So let's just take a look at how much is the dollar down here. Let's look at our currencies. The US dollar is down only 0.11%. And all of the commodity-based countries like Canada, New Zealand, what do we got? Yeah, Canada, New Zealand, Australia, they're all They're all moving up nicely, but they've just pulled back in the last, again, we're seeing this across the board in the last half hour to 40 minutes roughly. We're seeing things come off their highs. The Canadian dollar's come off its high, the euro's come off its high, Australian dollar, New Zealand dollar all come off their high, and the US dollar started to tick up again. So there was quite a trend there, and then all of a sudden we've had this little bit of a pullback. So let's take a look at what happened to gold. Is still hanging up there pretty good at 0.41% up, and silver is actually now 1% up, hanging in there pretty good. Platinum's up, and copper has pulled back from its highs significantly this evening. It's only up 0.28% right now. So something's changed in just the last 40 minutes. Is there any news or anything that we can see?
I don't see anything, catalyst or news. Let's see.
Bitcoin's steady now. There's other crypto-linked stocks plunge in Hong Kong. That was this evening. That was this evening's news. So it's pretty fresh, I guess.
Unless the Chinese ban on Bitcoin could drive people back to gold as a store of value.
It's possible. Yeah, I mean, Bitcoin's up 2.4% in Asia trading now. So it's at 44,250. So, that's a little bit of a risk-on indicator as well, don't you think? Bitcoin, some of the cryptos.
That's like the VIX.
Yeah, similar. Yeah. So what we're going to do is let's just rattle off. What do you see are the stronger sectors that you might expect to follow through, say Monday, Tuesday, Wednesday, Thursday here? What do you think?
Well, it looks like technology, QQQ, XLK, the chip sector, SMH.
So in the technology, would you go for the bigger market cap stuff, or would you go for the Russell 2000 and 3000? 1,000 type stuff.
The almanac suggests that it's more of the big cap tech, especially with chips within that, and then within financials too, specifically the regional financials rather than the money center banks. Yep. And then also consumer discretionary could be strong too. So it really is a risk on mentality, and we're already seeing that in the futures. Yeah.
Okay. Well, it's going to be an exciting week here. So we're definitely going to favor the seasonality all the way through. Normally, in most months of the year, like probably 10 out of 12 months for the year, we do pull back on the last day of the month. September is the exception, where we're still supposed to be strong right into the last day of the month. It could be a failure this time. It could be the opposite. I don't know yet, but we lean, unless we know otherwise, unless we see some macro catalyst that might interfere, we kind of stick with our seasonality, right? Stick with the data unless you have a reason to supersede it with something else, I guess. But
StockOdds says plus 0.43% for the spider on the last day. So that's pretty strong.
That's pretty strong. Yeah. I mean, it always makes me nervous when we have such a big move prior to these type of things, because, like we were supposed to have a pretty choppy, benign week, and all of a sudden the Fed, created this, everybody had to jump in expecting the Fed to be dovish, which in fact it seemed to be. So we rallied again. So we got way ahead of ourselves, in my opinion. So, but because we had a correction just before that, I think that's part of the reason that it played out this way. So, where are we for September so far, month to date?
You have it on your screen. I'm trying to see it on mine.
I'm just going to open a screener here and pop it in there. I'll just do the diamonds, the SPY. Well, let's do them all while we're at it here. We'll do the QQQs and we'll do the IWM. Just like, where are we month to date on this stuff? That's what I'd like to know. So if I go to performance for the month so far, The diamonds are down minus 1.78%.
Mm-hmm.
The IWM is up 0.22% for the month. Qs minus 0.39 and the SPY minus 1.11. So you can see that most of this month so far, it has still been, small caps and tech that have really held up the best, even in spite of the correction or anything that we've seen on some days. They still held up the best. And for the week, because we had some rotation there, the diamonds were 0.65 last week, and the IWM was 0.26, and the QQQs were minus 0.13, and the SPY was 0.57. So IWM has been consistently performing all month, and it's the only one that's actually green for the month. And diamonds bounced back a bit last week. And now going forward, I would expect that technology is the lagger at the moment for the week, and probably a good chance for it to play some catch up.
I'm looking at a screener right now for the on capitalization. So large cap is down 1.28% for the month,
Okay.
while small cap is up 0.5% for the month. So it confirms it on a capitalization basis as well as sector basis.
Okay, so what we're going to do is we're going to stay with technology. We're going to focus on some bigger cap. We'll probably, this bit of a discount on the Qs could be favorable. So the NASDAQ 100. And we're going to be a little bit cautious on basic materials. We could probably be a bit cautious on energy after, maybe another day or so up. I don't know. Like steer away from buying energy, might be short it though. Mm-hmm. And probably industrials could perform okay. I mean, we're supposed to be starting a new budget October 1st with the government, right? So in infrastructure is supposed to be part of that budget. So we'll probably
actually, industrials and healthcare are both expected to be up 0.22% for the last 3 trading days. So
well, you know what the seasonality is, why that's there is because often, they have been big part of the budgets, healthcare and industrials, right? So seasonally, it should be strong ahead of the new budget. So market factors in things in advance, right? Not so much as it happens or afterwards, but more in advance. So accounting stocks are stronger before accounting season. Retail stocks are stronger before Black Friday. Oil stocks are stronger, before the winter, when you think in the winter oil stocks should be higher. It's just the way it is. It's the market factors in everything that it knows or can anticipate. And then you've heard the slogan, right? Buy rumor, sell news. So when the news actually comes out or the event is there, that's not often the time where you get the biggest bang for your buck. All right. Well, anything else to add?
No, good. Good trading for this week, Rob, and good luck.
Okay, you too. All right. Thanks for chatting. Take care.
Bye.